All right, good afternoon, everyone, and welcome to the AFE Annual Conference, Saudi Arabia. From trading floors to real-time investments and commission-free tradings run by robo-advisors, the trading floor is transforming. Today, our panel is about fintech and reinventing the trading game. And I'm so pleased and excited to have with me on the panel today, Engineer Mohammed Al-Ballah, the chairman of Mubashir Financial Group. يعطيك العافية مهندس.
حييك هلا بك.
الله يخليك. Roland Bellegarde, Senior Advisor to the CEO, Saudi Stock Exchange. Hi, Roland.
Hello.
Chip Dempsey, Fintech Advisor, Board Director, Astana International Exchange. Hello, Chip.
Hello.
And from Egypt, we have Ahmed Hamouda, co-founder and CEO at Thunder. Hello, Ahmed.
Hello, Marina.
Okay, so we're going to spend the coming 45 minutes talking about innovation and on the trading floor, the fintech, the trends, and what's going on globally and on the international level. To set the tone, I'm going to be asking a very general question to Chip about the global trends and what's going on with the fintech disruption in the markets, stock markets, equity, debt, and all of that, and also digital assets, because I know you have a lot of passion for that. So give us a quick overview of the global landscape and the trends happening in 2021.
Sure. So when I was at Options Clearing Corporation, we thought in terms of timeframes. So now and for the next 18 months, what's on the landscape that has the potential to be disruptive? 18 months to 5 years, 5 years and further out. And I think that it's easy to look at the now to 18 months. You can say, you know, for ESG, 70% of the inflows to BlackRock are now tied to sustainability. Morgan Stanley says that 1/3 of their client investments have a mandate for sustainability. That's already playing. It's already clear. AFE is working on an ESG product. I think that that's well in hand. Everybody's aware of Bitcoin and cryptocurrencies. I don't think that that it's been put into context for most people. So I'll talk a little bit about that. But then in the 18-month to 5-year, you're really talking about smart contracts on distributed ledgers and the way that that's reinventing. I think post-trade is the next thing that's going to be sort of disrupted with that technology. And then beyond that, decentralized finance. But just looking at cryptocurrencies and what's happening now and trying to put it into context, if you look at World Federation of Exchanges, they say that they just had the report on 2020 volume, and total global equities traded about $557 billion a day. 107 billion of that was on NASDAQ, 101 billion on New York Stock Exchange, CBOE. Shenzhen is 84 billion, Shanghai is 67 billion. All of EMEA was 62 billion. Trading volume by dollar value in Bitcoin is 47 billion a day. And in all cryptocurrencies, it's 101 billion. So it's already in the ballpark of what we know as the global equity market. If you look at market capitalization, you know, the total of all global exchanges market cap is 109 trillion. And then if you look at AFE members, that's 3.2 trillion, and 2.4 trillion of that is Tadawul, and 1.9 trillion of that is Saudi Aramco. Saudi Aramco is the second biggest company. Apple is the largest with 2 trillion. Bitcoin alone is 1 trillion. And there's no management team. There's no sales force. That's started in 2009. It's already $1 trillion, and all of cryptocurrencies is 1.7 trillion. People talk about it being digital gold. All of the gold that's above ground is 10.9 trillion. So it's already a significant part and obviously growing quickly. JP Morgan said that if the digital gold concept behind Bitcoin plays out, that they're projecting a Bitcoin price of $146,000. So to put it into context again, there's only 18 exchanges on Earth that have a market capitalization larger than $1 trillion. So it's already large. And when you talk about what's disruptive in terms of competition, you know, the title of our talk today is you know, changing the trading game, or look at clients, right? So Robinhood is famous for having this explosion of clients, this new generation. They have 13 million clients. Charles Schwab has 31 million clients. TD Ameritrade, 11 million clients. Coinbase, which is just filed because they plan to go public, they have 40 million accounts. This is absolutely, so if you think about, like E-Trade was just bought by Morgan Stanley, and E-Trade has 5.2 million accounts. Morgan Stanley paid $2,500 per account. At 40 million with $2,500 per account, you're talking about a $107 billion company. Now, the projection is that they'll go public at $68 billion. CME and Hong Kong Exchange are both have market capitalizations of $75 billion, right? ICE, 64 billion. London Stock Exchange Group, it's like 52 billion. Or 54 billion, Deutsche Börse 31 billion, NASDAQ 25 billion, Japan Exchange 13 billion. 68 billion is a huge company. They have $1 billion of cash. They've already invested, they've invested like 6 acquisitions and 11 investments. These are going to be huge players on our.
What does that mean, Chip? What does that mean? Does that mean that those new companies are actually creating a threat to the current systems, or we're going to see a transformation across the board?
Oh, it's absolutely a threat. It's absolutely, okay. So if you look at Coinbase, 68 billion and $1 billion in cash, their growth strategy is to tokenize new assets. That is, first of all, it's going to be one of the largest exchanges, if not the largest. In private valuations, they've already traded at $77 billion. So this is going to enter, if you, okay, so CME generates $4.8 billion of revenue, right? And at $75 billion market cap, that multiplier is like 15.5, right? Coinbase is 1/7 the size in volume of Binance. If Binance was to go public, their revenue is 19 billion. If they went public on the same valuation level as CME, that'd be a $300 billion company. So what I'm saying is, these are huge new competitors. These are absolutely, and they are acquisitive, and they are making a lot of fintech investments, and they are attuned to this new generation of traders. And you've seen enormous new during COVID, partially, okay. I think.
Thank you. I'll come back to the particular technologies disrupting the trading floor. Let me zoom a bit into the region and to the Arab world, and to you, Engineer Muhammad. Given that this change is happening globally, and Chip just shared with us amazing numbers and statistics when it comes to the size of the threat. How do companies like Mubashir, and from a different angle, like the Saudi Stock Exchange, the DFM, the ADX, all those stock exchanges, how are they dealing with this threat? Do you see that the same is happening in this part of the world, or as usual, we're lagging behind?
I think these are 2 parallel tracks. Still the local exchanges, the fundamentals and the basic, let's say, facts about what the local exchange is doing in the economy and how they're supporting growth of companies is still a valid and let's say legitimate need, and there is a future for it. While, of course, other developments like what Shib have mentioned, will be taking place, and I'm sure there will be reaction at the due time. So for us as a company, we are, let's say, players in the sense that when we see something is taking, let's say, a presence and is actually affecting the market, we will respond. So far, we are focusing on the traditional and basic markets.
Thank you. I'm gonna stay at this level and come to you, Roland. And it always fascinates me how, you know, it's how easy or difficult it is to actually explain to the board. Okay, since you're an advisor to the CEO, how do you explain to the board of the Saudi Stock Exchange or any board of an exchange what's going on globally? I mean, how do you tell them the sinking ship story? You guys either need to change or you're going to be changed, or someone like Robinhood is coming to replace you. Is that an easy thing to do?
And my answer will be slightly be confusing. I never say this story of the sinking ship for the following reason. I think the world is not working at the same pace. The regulatory environments are different. Now, the trends are the same, I agree. And the trends are pushing the whole world in the same direction, but not at the same speed. So are we going to see more type of style of Robinhood type of activity? Sure. Is it going to be the same model as Robinhood, free fees, no fees, zero fees? No, for a good reason. I mean, fees are regulated. And before moving from regulated fees to unregulated fees, it's a completely different story that will require a lot of regulatory changes, framework changes. So I never say this story of the sinking ship. I explain the trend. I explain the fact that things are happening and at different speeds. So you have to be prepared, but it's needless to be in advance. So I will give you another example. If you look at US markets, European markets, exchanges are in competition. So the same product is across multiple exchanges. In the region, there's not even cross-listing, very little. So a product is in one place. It has positive effects, it has negative effects. Behaving as if you're already in competition with other exchanges, it's a useless investment. Knowing that this will happen one day, that's the great step. Preparing yourself to that step when it happens, be ready. And that's why, for example, we are creating infrastructure, a clearinghouse, securing the settlement, being in line with the other cycle of settlement of T+2 with the rest of the world. It's important. It doesn't mean that it's crucial to do it unless we are just going to sink tomorrow morning. No, but we have to be ready to be when competition comes, when the disruption comes, we will be ready for that. That's the way I would sing the story, I'll say.
I wish I had a different way of telling you this, but the competition is already here, and we have it on the panel. Ahmed, how are you?
I'm not a competition. I'm part of the ecosystem here.
Your business development line that you use. We would love to compete.
Yeah. So let me actually, I agree in so many ways with what have been told here, and I want to take what Chip, Engineer Muhammad, and Laurent were just saying, but to look at it from a different angle. So what has been happening over the past 5 years is some sort of a change in the balance of powers. If you look back, you will realize that financial institutions, banking or non-banking, whether in the capital markets or in the financial services space, have always been focusing on high net worth and other institutions without paying attention to everyday individuals, until technology started getting traction, and then companies started realizing that you can now acquire individuals and service those individuals efficiently. So those volumes and volumes of underserved clientele who used to do not have any economic sense building businesses for them, now it makes a lot of economic sense to have and to build a business targeting those people. And I think this is what Robinhood has been doing, and what other companies in the fintech space have been doing, is building these products that cater to and speak to the specific needs of everyday individuals. And accordingly, we started seeing new trends. We started seeing traction in different investment products as opposed to the traditional ones. And then we saw two approaches, two investment approaches. There is the robo-advisory model, whereby you ask these individuals to just deposit their money, and then there is a machine that is going to invest this money on your behalf. Or the other platform, which is the Robinhood model, whereby you avail all the different resources, all the tools, you make it as easy as possible for those individuals to have an account. You avail all the different investment products, and then you empower them to make the investment products. The idea here is these millennials, if they are empowered enough, they will learn, and by time they will be able to make the right investment choices. And I think a big learning that Robinhood missed when they started, and a company like us, like Thunder, we're after this empowerment, and we're very cautious of not making the same mistake, is coupling this freedom of investment choice with very strong educational platform. So I think we owe these individual investors not only with a very easy to use, easy to navigate platform, but also very easy to digest, easy to understand educational platform, so that it's not like you are giving them a gun to shoot themselves in their foot. You're giving them the means to reach financial freedom so that they can take whatever decisions they want without having the implications of the financial burden of these decisions.
I'll come back to financial literacy, because this is a very, very important point here. But I'd like you to just tell us briefly, 1 minute, what is Thunder?
So Thunder is all about making it easy for everyday individuals to invest. We're not about telling them where to invest or how to invest. We are about empowering them with the means to make smart investment decisions. This is what Thunder is all about. I think this is what Robinhood is all about. It's empowering those everyday individuals with the means. It's democratizing their access to financial services.
Thank you. Chip, when we talk about all these trading platforms and robo-advisors, we're really focusing on the retail investor. And I remember in the good old days when I was a financial journalist, we used to blame any fluctuation in the market, any limit up, limit down, to ignorant retail investors. How are we now dealing with this mass that's coming and having access to the markets without really learning the basics of trading? And okay, there is a platform available, which I hope it's a hybrid platform between like digital and a lot of personal handholding. But what are the global best practices when it comes to actually teaching the public about the fundamentals of stock markets and equity and debt, basically, and the importance of financial management and financial literacy?
Yeah, it's a great point and an important point to make. And I think that what Ahmad is saying about providing people with the education and the knowledge that they need so that they don't shoot themselves in the foot is an important point. In the United States, the Options Clearing Corporation created the Options Industry Council, and that is an organization that has educated. There's a ton of online content, all of it about options markets and about best practices in terms of risk management. I think that what you're seeing with this influx of new participants, and it's, by the way, it's a big influx. So the big brokerages like Schwab and TD Ameritrade, they saw 600,000 new accounts each in the first quarter of 2020, right? So that was up 60% and 150%. And the millennials that are trading are clearly not well educated. They're using leverage. They're not diversifying, and that's distressing, because we don't want people to come into the markets seeking to save for retirement and losing their money. on the encouraging side, there's been a huge secular shift away from active management into passive management, which is well diversified and is usually a better product for people who want to save. But I don't think that the people who are entering the market, this is an opinion, I don't think the people who are entering the market are necessarily driven by investment goals so much as they are, it's attention, it's content. It's something that's moving, it's something that's interesting, it's something that's evolving every day. And you have a choice between watching the news or watching sports or watching the market. And I think that's literally what's happening. It's great to offer people education. It doesn't look to me, they say you can lead a horse to water, but you can't make it drink. Well, you can't force people to educate themselves. And I think that what's happening when, Coinbase is adding 45,000 new accounts a day, right, which they did in Q4, is this is not because they have a fantastic educational offering. I'm all in favor of strong educational offerings. And I was a big proponent of expanding what we did with the Options Industry Council. And frankly, for anybody who's watching, the Options Industry Council is willing to share that content pretty freely with exchanges all over the world. That's not proprietary. The bigger point is that markets have become content. Markets have become almost entertainment, and people are engaging it that way.
Thank you, Chip. Let's come down to the particular use cases or the examples that we have here. We have a stock exchange and we have a brokerage, and both of you are representing leadership at these entities. How is technology disrupting the way you operate? And can you name at least 3 of the top use cases that you are focusing on now? I mean, investor ID, maybe eKYC for onboarding, especially with Mubashir. I'm going to start with Mubashir, and you're a company that started digital. I mean, you're born digital, right?
Right.
So how are these technologies and disruptive technologies supporting your day-to-day business, or maybe threatening? I don't know.
Okay, well, first of all, remarking on educating people about the stock market and assuming that they will be able to go safely in the stock market, invest and make money, I think is in a way misleading and risky. We know people, they know how to trade very well. They've been at the market all their life, but it's not, there is no sure way that they can get and make money. Learning is good by itself, okay? So learning and getting educated is good. We really have a problem. For example, in Egypt, the number of investors in the market, 300,000. And I mean, people who have stocks, big or small, about 330 or something thousand, out of 130 million. i.e. less than point maybe 2.5 or something %, very small. So the mechanics is different than the US. US, there is 50 million investors. Okay, maybe they're in mutual fund, but 50% of the population is investors. Maybe 150 plus. So these guys are receptive to learn new things. And if you give them free trading, they're willing to basically play in that. And the market itself is diverse. You'll find some stocks that will grow 10 times. Their value in a month or so, okay? Our markets are very stabilized. There is no drastic growth or something. So spotting such an opportunity and investing in it is not likely to happen in our market. So deploying the method of Robinhood in the region and thinking it will work, I don't think that is a reasonable assumption, okay? Whatever attractive and working there, not necessarily working in our environment. Yes, we have a problem that, only a small number of the population, especially for example, Egypt, but maybe Saudi Arabia is not. I remember at one time there was 15 million investors, okay, in one IPO or whatever. So this means maybe 50% of the population in Saudi Arabia, you could say that they're investment literate. They know how to buy and share and go in IPO or maybe buy and sell. Okay. While, as I said, the less than 1/4% in Egypt are even literate, investment literate. Okay. But, you know, proven that technology make it easy for people to learn. Okay, you find now they're using application and the mobile on something which rather sophisticated. Okay. So while we have to be careful in how to represent investment to the population and not, mislead them in thinking, oh, you just learn and then you'll make money. Okay. In the same time, we should be, let's say, trying our best to educate them and make them able to learn.
Sorry, what are the 3 use cases that you see changing the landscape?
Okay, well, one of the thing is globalization. Now, like for example, you can buy any product wherever it's manufactured through Amazon or Alibaba. Okay, no longer you have to go to a shop where the product is displayed. Mm-hmm. The same is with the financial instrument. But when you put a 3 million or so financial instrument, each one has its own different characteristics and could go up or down or right or left, then you need artificial intelligence. So now the way to overcome how to deal with the individual is not to tell him go and learn and invest. Okay, you diversify, you break from the limitation of the local market, give him the global market. And based on his preference, let technology serve him, let artificial intelligence help him in finding what he wants. Okay, that's one level. The other level is truly make investment opportunity available to all individuals at all income level. If you find an average, for example, Egyptian who's making, let's say, a few £1,000 salary. Okay, that guy is almost hopeless for him to go into any investment plan. Most of the investment companies, they pride themselves by saying, I will not talk to any investor, I will not manage the assets of any investor unless he put £5 million. I hear somebody gone down to $1 million. So these guys are left out. But with technology, we can serve these guys. Again, the cost per transaction, the cost for providing sound advice does not need you have, let's say, a fund manager or an asset manager educated and capable talking to this guy. And at the end of it, costing you hundreds or thousands of pounds for a guy who may end up investing £500 a month. So employing technology to serve these people, okay, is the other one. So as technology made it easy for us in a lot of things, okay, and made things that we could not dream of, okay, like navigating. If you go to a new city anywhere in the world, you never dream that you'll be able to find your way out, go around in that city if it wasn't for Google Maps. But once you learned how to use Google Maps in your country, you can use it anywhere. Just put the destination and go. So that's the same for investment.
Thank you. Thank you. Very interesting views. Roland, do you agree with globalization, AI, access to financial services, and the impact of technology in making financial services available to everybody? Do you agree? And what are the 3 use cases that you see Saudi Stock Exchange adopting?
First, I do agree with what Ship and Mohammed Bala said. Actually, it's not because the markets are, people are not investing, having a good knowledge of what they're investing in. The Bitcoin is the perfect example. Everything moving upward, by the way, people will invest in it. So education is important, but you cannot force education, and people will always go where the bubble is. So I think that's something very important, and we have to be very cautious as entities like the exchange on not encouraging investors to invest without having knowledge. Technology, as it was mentioned by Dr. Bala, it's very important. It gives you access, actually. It's a democratization tool. You can use technology to lower the cost of the service. So as he was saying, if some banks and wealth managers do not want to provide service, if you don't have a portfolio of 5 million, they will definitely, technology can reduce that cost and can help, say, investors having less assets, less wealth to get some advantage of these services. So that's what I see the benefits of technology. If you look at it, what are we focusing on from an exchange perspective, you say the pain points or where we can add value. I think the data, I mean, our world today is full of data. You have so many data, so much data in real time that is difficult to navigate. So technology, artificial intelligence will help to filter this data for different purposes: investing, creating a portfolio, selecting or determining where to invest and what kind of criteria to use. That's where we can help on providing technology for the investors to be able to navigate this data. The second important element we're looking at from an exchange perspective is also the fact that we are at the core of an ecosystem in a country, in a region. And you look at, as you say, for example, investors, they have an identification number. When they want to invest, the regulators impose to them to fill in forms of KYC. So they knowing your customer is something key to every time you go to buy a new asset, you go to a different bank or a different financial company, you have to fill one. What if you can provide as an exchange or as an institution a mutualized KYC that everyone can access, so you don't need to fill 10 times the same paper? Doesn't mean that you cannot change it, you cannot change your direction, but you don't need to fill 10 times the same documents. Providing such a tool is something that could be very interesting, scalable. It helps actually to sell it.
Sorry, you mean centralized KYC portal for investor IDs?
Correct. That's one would be one of the services.
The Arab Federation of Exchanges ran last year a challenge, an innovation challenge on that particular topic. I need to get an update from Secretary on where we are, because one of the companies was actually providing the solution for that, and it would be nice to adopt at an exchange level.
Yeah, and an exchange, and they can go beyond exchanges. I mean, the banks, there's your banking services, you're using the same tool more or less for multiple purposes. So having one keeps consistency and share the information in an efficient way. That's one of the examples. But actually, what I want to say is that innovation and helps to democratize, helps to give access to much more investor. And I fully agree, it does not help. It may help, but it does not impose the learning process to investors. And that's really very, very important, because what we see today and empowering investors is great. I mean, the trend of passive investment is the reflection that investors do not trust anymore as active managers, or they may trust them for 1 year, but they cannot trust them for 10 years. No one can beat the market over 10 years. So the passive investment is the answer that comes out of it. So empowering the investor to make his own decision is a great tool, is a great way to do it. Technology provides that. But at the end, the learning process is not provided by technology. And that we have to be very, very careful about that. So I would say important for us is to innovate with purpose, not innovate just for the sake of innovation. And there are things you cannot change, but there are things you can really definitely make a difference.
That's very, very true. We still have around 10 minutes for our session today. I encourage the audience to share their questions to the panelists, and whenever I get them, I will be asking them. So please go ahead and start sending your questions. Ahmed, you recently received a license from the Egyptian regulator, a brokerage license, صح?
Yeah.
And that's the first license, I think, since 12 years or so.
Yeah.
And that's the Egyptian regulator, which is not يعني عادي regulator.
Yeah.
So how was that experience, and what's your advice to the fintechs and to the innovators when it comes to dealing with the regulators and regulations?
Yeah. And Amarna, if you would allow me, I will get to this, but I wanted to give my remarks on your previous question, because I agree with all what was said. I think when we mention education, is not the end result of educating investors is not telling them how to invest, but rather educating them about the risks and returns, the different methods that there are in order to choose investments. And with the use of technology, you can always reach to this concept of qualified investors and have some flags whereby you can interfere. Another thing that I wanted to mention is part of the active investment right now and having this access to the different investment products is having access to different ETFs, different mutual funds, and so on and so forth, so that actively they can choose their allocation of their portfolio between a portion actively managed by them, and then a big portion between themed investment products, ETFs, and so on and so forth. Back to your question, I think, and like seeing Roland with us here in the panel, I think if there is anything that I learned over my journey last year with the regulator is that we're lucky because regulators in our region are extremely open to listening to new technologies and adopting new technologies, as long as they are in line with the biggest priorities that they have, and that we are proactively engaging and serious about it. I think financial inclusion is one of the key priorities in our region, and accordingly, the regulators are very open to listen to new ideas. So to your point, since 2008, there were no licenses given in the Egyptian market. We proactively went and engaged with the Financial Regulatory Authority. We showcased our technology, our team, and how our plans is exactly in line with providing access to financial services, which is one of the biggest goals in Egypt. And to engineers Mohammed's point, 0.5% penetration is extremely low. The situation in Egypt was you have the big players who are focusing on institutions and are reluctant to innovate when it comes to everyday individuals. You have the smaller players who are in a survival mode and are incapable of innovating. And accordingly, the Egyptian regulator was open to like trying out new technologies and new companies as long as they are very serious. And to your point, like we talked about electronic KYC and easing the digital onboarding, we talked about the educational plans, and this is why they were fine going the extra mile of giving us a license.
Ahmed, I'm going to put you on the spot here, and I know that you are in love with regulators because they gave you the license, and I love them too. But really, what is the painful experience that you went through? I mean, don't tell us that it was a walk in the park.
It's not a walk in the park. Like you start with convincing the leadership, convincing the board, which is one thing, and then you have to convince middle management, which is another thing. But at the end of, so it takes a lot of time, it takes a lot of efforts, but at the end of the day, if you, like the thing is, all the regulators in our region, they have very valid concerns. If you understand their concerns and you provide a solution that can mitigate these concerns and these risks, you will find them extremely receptive to what you're saying.
Very good. Okay.
Definitely, it took a lot of time, a lot of effort, but it paid off.
Very good answer, Lana. That's a segue to Chip. Chip, okay, let's face it. You have stock markets dealing with money, dealing with stocks, dealing with wealth, real-time trading, fractional trading, crypto assets, things that are avatars, alien to us, okay? And there is a technology that's is disrupting the way we do business. There are risks, there are operational risks, there are compliance risks, there are data privacy risks. There are a zillion types of risks that are facing us every day. What's your advice to regulators and to people like Engineer Muhammad here? I mean, he runs an operation, and I'm sure his team, they come to him every day with new technologies, and he's like, okay, we're working properly now. Why do you want to change something that's already working properly? So what's your advice when it comes to risks and managing risks?
Well, first of all, I don't think it's working properly. In January of 2019, there were 153 unicorns, these private companies worth more than $1 billion. Today, that number is 614. That's 614 companies that have not joined the public markets, right? SPACs, in 2019, there were 59 special purpose acquisition companies in the US. That's effectively a way for a company to avoid the IPO process and still get a public listing. Today, last year, 248 of those. So far this year, 296. There are 434 special purpose acquisition companies currently seeking an acquisition, and they have $140 billion of dry powder. So let's not pretend that everything's fine, right? Secondly, what my friend Mr. Abdullah said, I think is absolutely true. Technology is democratizing access, right? And here's my message for regulators. The same thing is happening. Technology is democratizing access for issuers, right? He's talking about small investors. Well, there's also small companies that want to raise capital. And you're seeing the creation of these security tokens, and you're seeing decentralized finance. And this is effectively this is like if you have mercury in the palm of your hand and you push your thumb down and it just moves somewhere else. Well, small companies are looking to get financing, and they're looking away from the regulated markets because it's become so onerous to participate in the public markets. So the fact that,
in a nutshell, because we're running out of time. Okay. So what's your advice?
So my advice is that recognizing that there's this unmet need, and that regulation has to be more permissive of experimentation, so that organizations like Roland's can say to their board of directors, here are the areas where we're making experiments, because we can see that it's a fast moving.
Thank you. Roland, to wrap up this session, and I still have, I can't keep up with the questions. There's a question about Egypt and opportunities, but let me ask you this, Roland, are we going to see a platform that allows companies like Ahmed's Thunder to actually list on the stock market without going through the painful prospectus and process of an IPO?
I think we will see this happening, and I would say to bridge the gap with what was said by Chief. It doesn't mean it has to be a regulated market. It does. And there must be some regulation around it, but it could be a very, very simple technology allowing capital raising, and that's really what I can see today. Most exchanges have junior markets, but I mean, these junior markets, they are born out of a simple regulation, but regulation tend to increase over time. So I think that's where also, in a way, it's not the technology itself. Technology allows it, but it's the mindset of allowing investors to take more risk in a simpler environment, not to go through all the legal processes.
Thank you. There's a question about opportunities in Egypt, and I'm not going to ask Ahmed, and Ahmed, he's going to sing the praises of Egypt. I'm going to ask Engineer Muhammad, what do you think of Egypt as an opportunity?
I think Egypt was able to come up with basically major breakthroughs. I think, of course, tradition-wise, the stock exchange in Egypt is more than 150 years old. Okay, it's the fourth exchange in the world. Okay, I think once the market realized that there is something that makes sense, that there is a true proposition that will help them as individuals, they will adopt it. So I believe that it's just left to the players to come up with the answers. As Ahmed said, the major players are saturated with opportunities, and whatever they do for themselves. Small and let's say players, I mean, in the financial institution, do not have the ability to innovate or to invest in R&D. Okay, so there will be some companies. We invested heavily in R&D. We developed the suite of products for the individuals, okay, for the small investors that has games, that has education, that has training, that has different products. We call it do family, do trade, do invest, do fund, and so on. So we believe in Egypt, if you give the right product, there is a receptive and people with the right appetite to basically go there. So we're betting on in Egypt.
The AFE team, they're screaming at me to end the session. I mean, there's a lot more that needs to be discussed and can be discussed. The 45 minutes flew by like magic. Anyways, thanks a lot for attending. And thanks for the input from the amazing panelists. Thanks for everyone who joined, and hope to see you soon. Good luck, Ahmed. I know you're gonna rock it, the Robin Hood of the region. Inshallah, good luck. Thank you.
Thank you.
Thank you. Bye-bye.